Hey, what's going on, everybody? Today we're going to be breaking down how I made $1,000 during the Asia trading session. Normally I don't trade Asia, but it's been very volatile lately, so I liked what I was seeing, and we're going to go ahead and break it down here. So jumping right into it, I went long to target some equal highs up here to the left that aren't really visible right now. The video pauses right here for a second, not really sure why. I'm trading five different accounts, so you're going to see me jumping through different top step accounts, so that's why it's going to look a little bit funky there. But I like how we have internal equal highs right here resting right below a fair value gap. That's going to be a big draw on liquidity, and I'm looking at primarily this SIBI right here because it's in line with a major quadrant level, and we had a reaction right here at the low off of a quadrant level where the trade pretty much originated as um, the market maker buy model started right there. So everything was good as long as we held this SIBI and this fair value gap and this order block right here. So that's why my stop is below this candle, because it is the low of this fair value gap. Came down and swept this one more time. I did get a little bit of a more premiumed entry, so I had to deal with a lot of heat right there, which is pretty common for Asia. I marked this out because I wanted to see immediate rebounds right there. And following immediate rebalance, you want to see a nice energetic move away, and that's exactly what we're looking for right there. Swept those equal highs, everything's looking good, and now I want break even at this spot because this is really where the line in the sand is for the trade, as far as are we going to continue bullishness and actually touch those equal highs, or are we going to get a reversal and keep going lower right here. So that's why I say that this area that we're trading in right now is important. Notice how those bodies respect the midpoint of that fair value gap. So what I really want to see is price start to explore above that and begin using those quadrant levels within that fair value gap as discount. That's why I go down to the 15-minute or 15-second chart right there, because I'm looking at that 1-minute order block that I marked right at the midpoint of that fair value gap. I want to see us hold that. I was checking the 15-second time frame to see if there was a fair value gap in line with that. So I want to see speed from here. Just watching it accumulate at the midpoint there. So that's exactly what we want to see right there. Clear displacement towards the buy side targets, which is going to be the relative equal highs right there. Stop is moved underneath the inversion fair value gap. There's no way it should go below that because that is your second stage reaccumulation. Should never go below that low as long as the trade is good. If it does go below that low, then your direction's probably wrong. Getting close to buy side here, they're tricking um, retail sellers, thinking that we've got a strong level of resistance right there. It's just going back down into that fair value gap where we should see some movement higher from here to finish off that market maker buy model, and it ended up being the high of the day because price absolutely dumped from right there the rest of the day. So let's go into trading view and start to break this down. All right, so first things first, the most important thing to do whenever you are looking to take a trade or engage in the market, put risk in the market, is have an understanding of where you want to see the market go, right? You can't just go in and look for any fair value gap or look for any type of pattern and then automatically, just take a trade and hope it works. You have to understand the framework of the market, and the framework of this trade was using market maker buy model, and the draw on liquidity was this high right here. And I'm going to go over why it was specifically this high now. So whenever you're trading Asia, typically the best thing to do is wait for the first hour to pass. So the market for futures and NASDAQ opens back up at 6 o'clock. So right here the market closes at 4:59. Got an hour to wait, and then it opens at 6 p.m. right here Eastern Standard Time. Now you want to wait for liquidity to be established within the range from 6 p.m. to 7 p.m. So just wait an hour and wait to see a major high and a major low to be established right here. So you see we open up, create this high right here, and we never trade back to it, right? We try right here, can't do it. Try right here, can't do it. So now what do we have right here? relative equal highs at an important timed or session liquidity right here. So these equal highs is my draw on liquidity. Equal highs alone is good enough for me to establish or create a framework for a trade and for targeting purposes. But right here, since we have times liquidity behind it, it makes these equal highs even more high probability. And then we have this initial, this should be low right here, initial low, and it's also paired with this one right here. So these are relatively equal here as well. Now we're framing a market maker buy model. So we drop lower and hit a specific level right here. Now I want to pause and talk about what these quadrants actually are because it creates the entire um, the, the validity of the trade and why I'm trading specific fair value gaps. So these quadrant levels and these lines, you have a blue line right here and you have a purple line right here. A lot of people typically wait for, in their model, maybe they're looking for like a delivery into a 15-minute fair value gap, and then they go down to like the 1 minute time frame. They look for like an inversion fair value gap, and then they can go short from there. So their point of interest is like a 15-minute fair value gap or an hourly fair value gap. When you have an understanding of market maker models and you can read algorithmic signatures off of these quadrants, you don't need to see things like that. You just need to read how price is delivering right now at the right time and have liquidity that you're targeting that's relevant. So let's break down these quadrants, right? You can see we have this blue one right here. On the left-hand side, we have this daily time frame. So this quadrant, I'm marking out this long discount daily wick. Why this one? Because one, we're trading into it right now, so it's the most relevant. And two, out of anything right here, right, on the daily time frame, this is the longest wick. It goes the lowest out of anything right here. So that's why I'm marking this one out. I want to have these quadrants on my chart. I'm marking out levels like this using the daily chart every single day. It's how I'm framing every single one of my trades that I take. If I see a fair value gap and there is not a higher time frame quadrant level aligned in that fair value gap, I am not taking it. Okay. This is where you find your high probability fair value gaps, is when they're forming in between these levels. This is per the ICT 2025 mentorship, something that I've applied to my trading, and my win rate has gone up significantly. So we got the understanding of what this blue line is. Now, this purple line, these quadrants are a little bit more hidden. So quadrant levels, I'm looking at gaps. I'm looking at the quadrants on like imbalances, new week opening gaps, new day opening gaps, daily wicks, daily imbalances, but I'm also utilizing opening range gaps. And it doesn't just have to be the opening range gap that you're trading into today. If there's a really large opening range gap that you're trading within at the current time, that's within the last like 3 to 5 days, those levels will be important as well. And how to find that is down here in the bottom right, going from electronic trading hours to regular trading hours. We're going to see that the chart looks a little bit different. And if we go to right here, wait, actually, nope, right here. If we go to right here, this opening range gap is from Friday. So we closed here on Thursday at 4:14 p.m. and then we opened down here at 9:30 a.m. on Friday. And we're currently trading Monday going into Tuesday's Asia session. Okay, but look how you can see my markings right here. You're not going to see the price action we were just looking at because we're in real-time trading hours or regular trading hours now. So it's only looking at 9:30 a.m. to 4:14 p.m. Electronic trading hours is where you're going to see that overnight action. But you can see that within the area that we're trading into now, this is a giant opening range gap. So if I measure it out, this is a 500 or 430-ish point opening range gap. Those levels are going to be extremely important to me, especially now since we're trading into it and it's relevant, right? So that is where the purple quadrants come from. And it's kind of like having x-ray vision of the market, right? A lot of people aren't going to be looking at something like this, and you can utilize these levels to find where gaps are likely to form. And if they do, and the time is right, and you have a good draw on liquidity, those are going to be where your high probability fair value gaps are going to form that you can trust. So let's go back into electronic trading hours and look at the action we were seeing. So real quick, before when I mentioned how a lot of people are looking for, for instance, like on a higher time frame for price to trade up into a 15-minute or hourly fair value gap to where they can then look for shorts or longs from. With this, you don't need to, right? We're just looking for bullish or bearish algorithmic signatures. And what does that even mean? Something like this, right? These levels are not just like where you look for um, trades from, like where the fair value gaps to form from, but they're going to act as support and resistance, like real support and resistance levels. So you might be thinking, well, when we are dropping right here, this looks like an obvious low, and we have relative equal lows right here. Maybe we go and take these out. Maybe we go up and then trade and take these out. Well, not necessarily, because what we've done so far is we've left this buy side liquidity. We've dropped lower, creating these highs, this high, and we've had a clear respect of that level. And what do we do after taking it or after reaching it is clear displacement away. So now that pattern that you're looking for, and you're always, trying to guess which one's right, where you get an inversion fair value gap or a bullish fair value gap or an order block. This is how you validate it, right? This SIBI right here, why do we like this one? Because look at your daily wick. The midpoint of that daily wick goes right through it. So whenever I have something like that, I'm marking it out on my chart in gold, putting it through, and I'm looking for that to get respected. I'll take it off real quick. What else do we have right here? Well, in this displacement leg, we have this fair value gap, but it doesn't go through it. Yes, it does. You're marking it with the imbalance right here. That's why that fair value gap is trustworthy. That's why I like that one. That's why I'm going to keep that one marked on my chart right there. And then we have an order block right here, but that doesn't go through anything. But these are the two down close candles that swept the equal lows right here and had the reaction off of this. So why do I trust this as an order block? Is because it caused the delivery and displacement off of here, and it's through a fair value gap, right? And so this, what we've been taught to find is these levels are how you validate if it's actually real or not, if the pattern that you're seeing is actually one that you can trust. Right now, all you have to do is wait for price to reach these levels during the right time. What are the times? I have them marked right here, 7:50 to 8:10. Those are your macro times, right? Any 50 to 10 is a macro. 9:50 a.m. to 10:10 a.m. that's your morning macro. 10:50 a.m. to 11:10 a.m. that's your going into lunch macro, right? Your late a.m. macro. Same thing, every hour has a macro. So 7:50 p.m. to 8:10 p.m. during Asia session, Eastern Standard Time, is going to be your Asia macro. Trade up. Now that these PD arrays are validated and verified by price, we need time to verify them. We go down into here, into this valid fair value gap, one that we can trust here and here, in between the macro, and deliver off of there. So this is exactly the delivery that I wanted to see, right? We have these relative equal highs right here that I was looking at that was resting right below this fair value gap. So this SIBI is one that I wanted to see, and why I wrote over here that this one is important is because what else? Let's put it together here. What are we doing? We swept equal highs off of this delivery right here, right? This isn't a breaker. So low, high, lower low, higher high. That's your breaker. We trade through, and we see it get respected. Now in this SIBI, I'm saying that this is going to be where price is going to prove to me that we actually are going to hit these highs, or we're likely just going to keep on dumping, right? Because higher time frame order flow is bearish, so I'm trading against the trend, the higher time frame trend, but that's okay whenever things like this align. You just have to be a little bit more aggressive with trailing your stop. Okay, so we trade up into here. This fair value gap has the new day opening gap price through it. So close right here is at 4:59. Opening right here is at 6 p.m. A lot of times that'll create like an actual gap. Right here it didn't, but that doesn't mean that you just completely disregard it. You still want to have this price level marked on your chart. So this fair value gap was validated by having the new day opening gap price through it. So anytime we can sweep equal highs and trade into this fair value gap, there is a chance where if I'm wrong about my direction, we could see the sell-off right here. That's why I was aggressive about my stop loss as well. But now we get in a little bit closer and we want to start to read how is price treating this fair value gap. I'm measuring out the quadrants of this gap, and we'll make it black right here. Actually, we'll make it a little bit easier to read. We'll make it green. Okay. So getting in a little bit closer, we come up here, see how we're respecting the midpoint of that fair value gap, and then we see that immediate displacement away or rejection. So that is why I was this area was important, because if we continued to respect the midpoint like that, then it was likely I was wrong. But then we get this reaction off of the breaker, we trade up higher, and now we start to get closes above. So it's like you read it as if like price is starting to explore above these levels, and then you want to start to see them get used as discount. So I'm looking at like this line right here, the lower quadrant. I want to see that get used as discount. I want to see the low of the fair value gap get used as a discount array, right? So like resistance turned into support. We bounce. This candle close is closing above the upper quadrant of that SIBI, right? So I really like that because that's telling me that we are, willing to explore further up and on a closing basis go above these levels. Get down here, open up at the lower quadrant, and then we're accumulating. You saw on the 15-second time frame, I was looking at this order block because one, it went down into that breaker. It was at the midpoint of this SIBI right here, and we traded through it. So I want to see that be an order block. And order blocks are validated further whenever you go to a lower time frame and you see a gap or an imbalance through them. So that's why I went to the 15-second time frame. I saw a fair value gap through there. I liked it, and then we got that displacement away. Once we had the displacement, I was confident that we would reach my targets. I could put my stop loss below this SIBI right here, because if we're trading market maker models, like I mentioned, we don't want to see the second stage of accumulation get traded through or traded below. And then we go up here and we tap our initial high, and then we get immediate rejection away from it. I believe we go and sweep that one more time and then sell off from there. So overall, a really great trade, a really good market maker buy model during the Asia session. This is something that you can trade whenever there's a lot of volatility and you're someone who works a job, goes into job like a 9 to 5. This is something, that's still possible for you. So just study these quadrant levels. This is how I'm utilizing them and seeing success with them. I would recommend going and watching ICT's channel where he introduces them. And yeah, hopefully this helps, and good luck and good trading to you.